Since 2007-2008, a few thousand people in Bulgaria are victims of this very ruthless predatory lending by three banks: EFG Eurobank Bulgaria, UniCredit Bank AG and Piraeus Bank. Many families are already ruined and millions of Swiss francs stolen away from them. And not only that, but their homes and everything else they own is taken. Only a few are still managing and keep on paying a mortgage at massively increased interest rates, up to 9.36% for a loan denominated in Swiss francs, with contracts which is full of unfair clauses. Our association was founded in 2015 with the main purpose to help all these victims through their difficult times by giving them support and legal advice, making the problem known to the public and all relative bodies in Bulgaria and the EU to achieve legal justification. Because of our active work, the Bulgarian Commission for Consumer Protection lodged in court 3 collective lawsuits against the above mentioned banks, but currently undergoing are only 2, which are against UniCredit and the Piraeus Bank. The lawsuit against EFG Eurobank was ceased before our association and all concerned parties started to participate actively in it. The Bulgarian Commission for Consumer Protection and EFG Eurobank, in our absence and without our knowledge, on the 18th of November 2016 signed an out-of-court agreement, and the Bulgarian Commission for Consumer Protection withdrew its claim. This signed agreement is a knife in the back of the Bulgarian consumers, and we publicly expressed our considerable disappointment and disapproval. Sadly, the reality in Bulgaria is not what it appears to be. The big financial institutions are like octopuses who've spread their tentacles to media, politicians and government organisations. Here is some background on the denominated Swiss franc loans dispersed by Eurobank in Bulgaria. It all started with a false and misleading advertising on the type of loan the consumers will be signing up for. Consumers were promised low interest rate because the Libor is lower than the Eurobor, and Swiss franc is a very stable currency. For such misleading advertising, Eurobank has already once been convicted in a court of wrongdoing and in breach with a good commercial practice and ordered to pay a penalty. Eurobank displayed a very oppressive behaviour when promoting the Swiss franc denominated loans. Its employees were aggressively working towards convincing every borrower to convert his lever or euro loan into Swiss francs. The fact is that none of our victims asked for the loan in Swiss francs. Many of them are even not familiar with the currency. The fact is that they never withdrew Swiss francs from their accounts. Though an accounting operation, the bank converted the initially requested in euro or lever amount into Swiss francs and took a commission for it, obliged the borrower to pay her back Swiss francs, and then converted all the remaining Swiss francs, less the commission and bank taxes, to euro or lever, and then made the funds available for the borrowers. But the story did not end there. The saga with the unfair and abusive behaviour of Eurobank continues from 2007 until present day. In 2008, Eurobank several times increased the interest rate of those type of loans, first with 0.5% point and then with the significant 2.2% points. In October 2008, the Swiss National Bank came with 3 extraordinary decisions regarding the cost of borrowing in Swiss franc, Libor, and respectively its effect on the exchange rate. SNB clearly demonstrated its commitment to an easing in the money market and gradually was working towards reducing the Libor to 0 and then negative territory, but this did not reflect on costs for the borrowers in Eurobank. In January 2015, when the SNB decided to discontinue the minimum exchange rate of 1.2 Swiss francs per euro, and in the meantime to lower the LIBOR 0.25 to 1 minus 1.25, to ensure that the discontinuation of the minimum exchange rate does not lead to inappropriate tightening to the monetary conditions. After all, instead of reducing the interest rate, Eurobank started to put pressure on a few surviving borrowers to convert their loans in lever at the historically high Swiss franc lever exchange rate, and to sign against officially inflated and significantly higher than the initial principal. This extortion continues today. The signed with borrowers contracts, they are standard, they're not negotiable, they're one-sided and full of unfair contractual terms, in breach of Council Directive 93/13/EU on the 5th of April 1993 on unfair terms in consumer contracts and Bulgarian contractual legislation. It is found that unfair contractual clauses are: number 1, obligation towards the borrowers to repay their loans in currency that they never requested and never withdrew from their bank accounts. Number 2, the way the interest rate is formed is unclear. There's no formula or methodology described in the contract. This enables the bank to change at will. Number 3, the currency exchange rate risk is fully transferred to the borrower, and there is no provision to safeguard the customer from this exposure. Number 4, when the contracts were signed, the borrowers were not provided with this crucial information. Also, Eurobank transferred all denominated in Swiss franc loans to a company called Bulgarian Retail Services, and the borrowers are again in a precarious situation because the conditions under which the transfer is made are not clear to them. They are in no way informed on what basis and under what conditions this has been done. The borrowers were not advised of their rights and obligations to the new firm, and under what conditions the relationship between the parties would continue. Currently, there are hundreds of personal lawsuits against EFG, Eurobank Bulgaria, Unicredit Bank AG and Piraeus Bank in Bulgaria. The court ruled that the clauses of these contracts are to the detriment of the consumer because they give uncontrollable rights to the other party. They do not meet the requirements of good faith because the bank did not take care as the good co-contract when signing the agreements, and they led to an abundance of imbalance of rights of both parties, giving exclusive rights only to the bank to change uncontrollably the content of the contractual relations between the parties. There is a proceeding pending before the Court of Justice of the EU, which is case C-11917, which preliminary rulings are of crucial importance for the outcome of the cases in Bulgaria, because under the terms of the concluded contracts for the credit, 1. The amount of the agreed credit agreement as specific amount is defined in Article 1 solely in euro lever and is not in Swiss francs. Number 2, notwithstanding that in Article 2 paragraph 1 it's provided that the credit is taken in Swiss francs. Borrowers have no access to their Swiss franc accounts because they are blocked accounts. Number 3, the Swiss francs from the blocked accounts are ex officio converted from the bank into euro lever before they are to be utilised, and the actual withdrawing by the consumers from their accounts is made in euro lever. As can be seen from the above, cash flow from the lender to the borrower in Swiss francs does not exist. The actual allocation and utilisation of the loan is